E-mini S&Ps open up the week moving lower. In fact, at one point today, we saw E-mini S&Ps down over 3%, dipping below 5,600. Now, they did rally into the close, holding north of that 5,600 level, but equities have struggled here since February 19th, down almost 10%. So in a very short amount of time, we've seen a big move lower in stocks. And again, culminating in today's level, dipping below 5,600 briefly before rallying back above to close, still down well over 2.5% to start the week. Now, what does this mean for volatility? Well, volatility typically moves inversely to the indices. So as we saw stocks moving lower, volatility spiked higher. In fact, got to its highest level since August of last year. As we continue to kind of grapple with what will the Fed do if rate cut expectations remain elevated. But Mr. Powell told us last week that the Fed wants to be patient and wants to kind of wait and see. So we'll have to wait and kind of see what happens with the Fed as the next Fed meeting coming up this month in March and then the next in May. Right now we're seeing very low odds of a rate cut in March. However, we're seeing about 85% odds of a rate cut in May. Those rate cut odds have moved significantly higher over the last week. But again, seeing volatility higher in stocks across the board. Lastly, let's talk about what we have tomorrow. Tomorrow is Tuesday. We get the NFIB small business optimism early, followed by the JOLTS report. We don't get any Fed speakers, whereas the Fed is in their blackout period ahead of March FOMC, and we will continue to get some earnings reports. So equities start the week off moving lower, again dipping below 5,600 briefly before rallying back north above to close ahead of tomorrow's NFIB small business, JOLTS data, no Fed speakers, and more earnings.